versus speculation. Investment versus speculation. Do you know why brokers in the New York Stock Exchange always cheer when the bell rings at the end of the day? That is because, regardless if you win or lose, they will make money. You should know the difference between an investor and a speculator. There are many speculators in the stock market. You shouldn't make the mistake of being one of them. Speculators are just like gamblers in a sense. Gamblers bet huge amounts of money on high risks. They win sometimes, but lose most of the time. All the while, it is the casino which is benefiting. How do you know if you're investing and not speculating? It is when you study the company first, when you weigh its pros and cons before buying stocks. Second, it is when you avoid taking high risks. And third, it is when you expect adequate and not overly high returns. If you keep in mind these three rules, you will avoid losing money on your investments. You will gain money for yourself and not for the brokers. Speculators are prone to making wrong decisions. Investors, meanwhile, are always cautious. The result is that they have long-term sustainable success. You will become one if you follow Graham's guidelines. Now more and more people are getting into day trading and online trading. It became more like playing a financial video game. Information about investments is pouring out in bars, kitchens, cafes, and restaurants. Financial advertisements are all over TV and internet. The problem is that people are misinformed. They are getting plenty of data, but not enough intelligence. They just see stocks as blips on the screen. Most of them are speculators. They don't bother to learn about the companies they invest in. What is important for them is to know the ticker symbol so that they could buy the stocks. In 1998, the stock price of a small building maintenance company tripled in just a matter of minutes. The company's name is Temco Services. The reason why its price shot up because people confused its ticker symbol TMCO with TMCS. Ticketmaster Online is a popular website which just had its IPO. People invested in Temco Services because they thought it was Ticketmaster Online. They didn't bother to take 2 minutes to check the ticker symbol on the internet. They just bought stocks and ended up buying Temco instead of TMCS they wanted. Would you be comfortable not checking stock prices every day? According to Graham, that is one criterion to be an investor. You should be looking at the long term, at the values of company you invested in, and not the everyday fluctuation. Doing so will prevent you from being influenced by others. There was one analyst in CIBC who pegged the price target of Amazon.com to grow from $150 to $400. The result is that Amazon stocks increased 14% on that day. That was in 1998. The analyst Henry Blodgett explained that his price target is pegged on a span of 1 year. Nevertheless, Amazon stocks continue to increase. It even exceeded $400 in the next few weeks.